The panel is in high spirits here, which is good. Actually, a super interesting convo because it's actually very timely. So, Jurgen, you're the moderator, right? Oh, Nick, you're the moderator. Okay, so Nick is moderating this panel, and they're going to be taking us through stablecoins, which is very, very thematic. So, over to you guys. Let's give them a round of applause.
Good evening, ladies and gentlemen. So my name is Nick, but that is absolutely not important. What is important today is the two panelists we have on stage here. We have Jurgen from Xago, and we have Kamo from Yellow Card. I'm going to give you just a quick chance to introduce yourself, your journey, and how you got to where you currently are in your respective companies. Kamo?
Hey everyone, thanks for having me today. So yeah, as mentioned, I'm Kamo. I work at Yellow Card as the country manager for South Africa. How did I get into this space? My experience actually started out in the traditional finance space. So I started my career in asset management. Did that for about 3 years, then moved into the venture capital space. Afterwards, I then dabbled within the fintech payment space. So with another company, I kind of got my hand into, where kind of the future of fintech and payments and this new sort of buzzword everyone was sort of raving about, particularly through COVID. Fintech, there's this new innovation that's kind of disrupting the industry of finance and other things alike as well. Until I eventually found myself at Yellow Card since April this year, which specializes in stablecoin infrastructure using, I guess, fintech. Can put it that way. Yeah.
Yep. Yourself, Jurgen.
Thanks, Nick. Kamo. So my name is Jurgen. I'm the founder and CEO of, or co-founder and CEO of Xago. We're a CASP-regulated FSP in South Africa, focusing on cross-border payments. We are also a digital currency exchange registered with Austrac in Australia, and also in Botswana, busy registering as a VASP. Also recently launched Xago Malawi, and soon will be Xago Zimbabwe. So we're trying to, exponentially grow over Africa at the moment. We recently surpassed $1 billion in transaction volume, so we feel our system is now nice and scaled, ready to go. And yeah, thanks for inviting me to this panel.
Okay, so Jurgen, I didn't give you much insight into the questions I'm going to ask you, so I hope you're ready.
Thank you. I'm excited.
Question number one that I'm going to throw at you. What is a stablecoin?
Well, that is actually a good question, but basically a stablecoin is just a unit of account. Yeah, that's actually a really good question. So a stablecoin is just a coin that lives on the blockchain, so different blockchains. For example, Ethereum blockchain is a smart contract, and what they do is when you issue a stablecoin, so one USD tether would be pegged to $1. So what really should be is a backing one-to-one of that stablecoin in a real fiat backing for that coin. So it really gives the stability of the sort of currency, well, however we all decide what stability is, but stability to a currency in the crypto world.
Fantastic. Kamo, are all stablecoins created equal? Can you give us a rough overview? I'm setting the scene here.
Yeah.
Stablecoins, there's not just one stablecoin. Give us a bit of an overview of at least the stablecoins that Yellow Card is processing, and just some insights around that.
Okay, good question. So Yellow Card, firstly, we use USDT mainly, and USDC. That's the most trusted peg towards the US dollar. But are all stablecoins built the same? I think inherently my immediate answer would be no, because firstly, they're privately issued, if I can put it that way. So a stablecoin essentially is just a token that has backing towards an asset, but they are privately held. So there are thousands of stablecoins in existence. We've heard about the ZARC, we've heard about people developing their own stablecoins in their own entities. So in essence, in theory, I guess you could say that they are sort of similar because they have the same backing. If they're pegged towards the US dollar, then really there's only one underlying that kind of moves its value or gives it its stability. But otherwise, the sky's the limit when it comes to stablecoins. So yes and no, if that answers your question.
So I've just come from Joburg. I flew in on the red-eye flight this morning, and there is a lot of excitement around stablecoins. A lot of interest, particularly actually from the mobile operators, mobile money, stable coins, just the integration and interaction between those two. But our topic today, how stablecoins are becoming the infrastructure for future finance. That's quite a bold statement. True or false, Jurgen?
Yeah, that is a very interesting question as well. So yes, it is starting to build an infrastructure, specifically in Africa. But maybe we have to first look at how stablecoin started and why it was started. So if you look at 2016, 2015, when stablecoins was, USD Tether came out, I remember actually seeing it coming out. It was iFinex, I think was the company, Bitfinex. And at the time, I suppose the first sort of day, I thought it was not a great idea. It was like, crypto got its thing. Oh, who the hell wants a US dollar pegged stablecoin? It doesn't move. But it probably took me a couple of weeks, and I realized this is actually a really good idea, because that is how you can transact in this digital economy. I like to call it crypto casinos, Binance, KuCoin, whatever. That was the on-ramp into these sort of unregulated exchanges. So I actually really saw the use case at that point, and I realized what the power of that could be. Fast forward to today, and the infrastructure part is how you can now use it in different settings. So, for example, how would a stablecoin be used in Africa is mainly because in Africa people are still very much focused on the US dollar as their store of value. So if I'm sitting in Malawi and I would like to get a store of value, well, they're not asking for Kenyan shillings. They're asking for US dollar. So using that US dollar denominated stablecoin, USDT, USDC, whatever, that gives them that confidence that there is some value there, and then they can transact with that. So that is the infrastructure.
Okay, fantastic. So in particular, stablecoins, what problem do they solve throughout the African continent?
So one thing I love about this space, particularly with Yellow Card, is that it's multifaceted. So firstly, with us, we want to bring big business to Africa, right? So the nice thing about stablecoins is they give accessibility into financial infrastructure to individuals and businesses that otherwise wouldn't have had that access through traditional banking and financial rails. So for example, he was speaking about money remittances. If someone requests to have money sent from one country in Africa to another, it's very difficult. Particularly regulation, number one, but number two, even aside from regulation, sometimes there just isn't the infrastructure to be able to enable that certain action to be performed. So through stablecoins, for example, with Yellow Card, you give us fiat, convert it into stablecoins, send it to the receiving country, we then settle it in the local currency of choice. So technically there isn't a movement of fiat across border. So through that, you've sort of, I don't want to use the word bypassed, but you've kind of found a way to very quickly, very effectively and efficiently sort of deliver value, just in a different sort of, what would you call it, different sort of look to what we're used to seeing in the traditional financial space. And I have to be honest, as someone who comes from the traditional finance background, it's something that took me a while to sort of get my head around. But I think the reason I buy into it so much now is because if our aim is to bring value, particularly in the African continent, this is one vehicle and mechanism which has made it pretty much seamless and possible to reach the continent at scale. So.
Fantastic. Jurgen, what do you see as the biggest challenges to adoption throughout Africa?
So actually, it's the same as always. As regulation if you look at certain countries, I'm just going to use two countries for example. Botswana have recently come out with their VASP licensing program. So the banks are then open to giving you banking rails and all of that. But then when you go to a country like Malawi, which is still unregulated, then it's a little bit harder to get those banking rails. So I think one thing is very important to know from a stablecoin ecosystem is you need banking rails. Without banking rails, there is no stablecoin. So, at the end of the day, if you have a ZAR-based stablecoin or a US dollar-based stablecoin or a whatever-based stablecoin, there is funds in a bank somewhere in the world. So if you don't have that banking layer, you don't have a stablecoin. So that is the most important aspect of this. So without regulation, without proper sort of, banks support, that will always be the inhibitor for growth in Africa.
Fantastic. Exchange control versus stablecoins. So, I mean, digital assets are borderless by their own nature, but regulation has not yet caught up in how to report that, or how to get permission, or how to just keep tally of it. So let's talk about South Africa in particular. Jurgen, I know you've spent a lot of time working with FinServe. Understand that. How do you see that playing out? Or just tell us the current state of affairs around the transfer of stablecoins cross-border, how that's interpreted, and how you think it's going to play out going forward, or how you'd like it to play out, or both.
Thanks. I was hoping that you were going to direct that to obviously, it's hard to comment on regulation sort of that is not being set. But we have spent quite a lot of time at the IFWG testing specifically cross-border transactions. So the real issue is when you do a traditional, remittance transaction, there are two legs to the report. There's the conversion into currency. So say I send rands to the US. There's the conversion into the US dollar. That's one report. And then there is the externalization event, sending the US dollars offshore. Because I can turn rands into dollars and not send it offshore as well. That can also happen. So there's two legs to that report. So, so it's the strangest words that they've decided to use it. The one is called a reportable transaction, and the other one is called a non-reportable transaction. I don't know who came up with that definition, but that's how it works. So the way the SARB currently sees sort of that would be the reportable transaction, as in the part where you get currency into a cryptocurrency or stablecoin would be the reportable transaction. That is the part similar to your sort of rands to US dollar conversion, and then the externalization event is then when you send the funds off your local exchange. Sorry, I don't know if this mic is cutting out, but anyway, so once you've sent your funds off the local exchange to a foreign exchange, that would be seen as the externalization event. So that would be the second leg of the report.
Camo, so there's the same situation. I mean, South Africa is not the only country that has exchange control. I mean, you articulated just now that fiat is not actually flowing cross-border. It's just a token, and you're managing the liquidity sort of separately. Do you think that's going to change going forward?
I think that's a very hard one to anticipate in terms of is it going to change, because firstly, again, you are dealing with a space that needs regulation, right? And how South Africa might interpret regulation when it comes to the space will differ to how Kenya does and how Botswana does, et cetera, et cetera. And if we're transacting in between those jurisdictions, everything needs to speak to each other. So it is what it is at the moment. For example, when I made the comment about, let's say cross-border transacting, at the end of the day, if you're not moving fiat outside of the border, then how exactly are you going to interpret the movement of that value across border? What type of foreign exchange is taking place there? And I think that it's still at its infancy, that discussion, and I think that's where the space right now needs to sort of work in tandem with regulation and with traditional sort of financial infrastructure players like your banks, in order to better define the space, because at the end of the day, we want to be able to coexist, but to also make sure the consumer protection element of these sorts of transactions are, put first and foremost. So yes, I think, just with any new innovation, there will be changed. As to where the direction of that change will head, it remains to be seen. But yeah, it's definitely a space which is defining itself as time goes on.
Fair. Is there any correlation around the corridors that are having the most stablecoin volume and exchange control?
I don't know if you want to comment on that one.
No comment.
No comment.
No, that's fair. No, okay, so let me ask you, what countries have the largest transfers?
So what I've personally seen, I will say, within the African context at least, we've seen countries like Nigeria moving massive volumes. We've seen countries like Cameroon. We've seen the Ivory Coast and Senegal. So, I mean, I guess you can see that there's a theme with these countries. These are countries which exist under massive sort of instability when it comes to their financial systems, very, very volatile currencies, very unpredictable sort of economy. So where there's that need is where we're seeing the highest volumes. And I think what I'm seeing in the space is the reason why it's not going away is because the people who are making the use, I guess, of these technologies are where the innovation is needed, and it's not just a fad, like a trend that you're seeing in the first world sort of environment, like in the States, you're using Bitcoin to pay for your, spiced chai latte or something like that. So yeah, I think where there's a need is where we're seeing the flows moving towards the most. And those are the jurisdictions I've seen, for example.
So one of the powerful features of stablecoins is actually, they're built on blockchains that have smart contracts. They're programmable money. Are you seeing any of those features yet being utilized in these countries? Or is it just sort of right now the coin itself being used as a transfer of value or to hedge the local fiat volatility or risk? Where are we in sort of that journey from it just being a medium of exchange to actually truly realizing the value of the programmability of these coins? And are there any applications that you're aware of, talking to the exciting part of stablecoin adoption in Africa and the future of these rails?
I mean, if I understand your question correctly, you're essentially asking, within these countries. Sorry, would you mind reframing your question?
No, fine. Okay, so I mean, like a stable coin is obviously just pegged to the underlying. You can use it as a more efficient, faster, cheaper way to transfer value. But inherent in a stable coin is the ability to get it to be used in a smart contract. You could build applications, collateralized lending, etc. Like, how does this future play out? How do you see it evolving, stablecoin adoption, and I guess DeFi, because they go hand in hand?
Okay, so operating in the African space, what I'm seeing most of all is basically people are just using it as a hedge towards their kind of unstable currencies, for example, right? And then obviously there's other countries where regulation makes it very difficult to expatriate funds where needed, particularly in a corporate sense. So we're seeing a need go there. Where it comes to where else the innovations can go, again, the sky's the limit. We are seeing, for example, the tokenizations of assets. Now that in itself has nothing really directly to do with stablecoins, but stablecoins are still the underlying driver to allow people to realize, I guess, the kind of value movement when it comes to tokenization itself. And that's something that's growing particularly in Kenya that I've seen, where people are now starting to tokenize your traditional assets, turn them into some sort of unit trust that they can package and sell off for people to be able to access investments which are otherwise not accessible unless you're a high net worth individual or based in a jurisdiction that allows for investment directly into those sorts of things. So it's an infinite space where really your limitation is really your mind. But yeah, I do think that for the most case at the moment, we're really just seeing the fact that people are using stable coins as a sort of trust layer and a hedge towards an otherwise unstable sort of economy, if you can put it that way.
Jurgen, the application of stable coins on your business, so Xago is very Ripple-centric. Can you just talk to us about the capabilities of Ripple, stablecoins on Ripple versus, example, stablecoin on Ethereum or Stellar or one of the other blockchains? I know you're quite a Ripple maxi.
Ripple maxi is maybe a strong word, but so the way the XRP ledger works is completely different from, Ethereum and some of the other blockchains, Bitcoin. Basically, the way it was set up is that Xago is a gateway, and when we issue funds onto the ledger, we then are the issuer of those funds. So we are naturally a stablecoin issuer. So whether we are issuer of rands, pula, Kenyan shillings, or whatever currency we transact with are naturally stablecoins, because those stablecoins have been issued by us and we are the issuer. That is actually quite an important distinction, because what that means is that if we go back to the reporting part of where you go in and out of crypto, is you go in and out of crypto on a one-to-one basis on Xago. You then transact going through XRP as our bridge currency in order to go, let's say, from rands to dollars, or dollars to euro, euro to pula, and then you're sitting in a pula stablecoin. That just gives us the ability to operate in a digitized economy and then go off and on-ramp into those respective currencies. So in a Ripple-centric ecosystem on the XRP ledger, you are not actually, the idea is not particularly to send those stable coins around, on other exchanges. So it's you are the issuer of that stable coin. So it is a slightly different sort of methodology to stablecoins. I know that Ripple recently launched the Arrel USD, which seems to have quite good adoption, so that's quite interesting. But also USDC is now available on the Ripple ledger. So, but still the main, I would like to say the main culprits is USDT on the Ethereum and Tron network in Africa, and USDC. So businesses seem to gravitate towards USDC. They seem to feel like it's a more regulated, it's just a better governed sort of system. And then it seems specifically in Africa, USDT and on the Tron network seems to be quite a prevalent coin.
Camo, you ready for another controversial question? Okay. CBDCs and stablecoins. Mm-hmm. Can you kind of just define for us what the difference between those two would be and how you see those playing out?
So the big difference between a CBDC and a stablecoin, a CBDC is basically a digital version of fiat currency, right? So you'll have the digital version of the ZAR or the USD or whatever, and that is sovereign money, if you can put it that way. A stablecoin is private money, so that's the first distinction. It is also a token that is pegged towards an underlying asset. So for example, if you've got USDT or USDC, it is pegged towards the US dollar. So its value is derived off of something rather than it being the digital version of a particular asset. So the nice thing about CBDCs, or let me say the advantage of them coexisting, is the fact that because CBDCs are sort of government related, you've got that trust layer, which you can say is still being developed when it comes to traditional stablecoins, because they are private, right? People are still kind of getting their heads around, the new sort of stablecoin infrastructure and stablecoin sort of environment. So having CBDCs in play kind of gives them that trust and credibility, right? It also gives them the infrastructure, right, to be able to exist. Stablecoins, as he mentioned, cannot exist without traditional banking and financial infrastructure. So they can provide the settlement rails, they can provide, other facets of the underlying infrastructure, for example. And then there's also use case. Now, whilst the infrastructure can be provided by CBDCs in order for stablecoins to exist, stablecoins still provide that innovation layer, right? Now, CBDC will be still very slow in terms of settlement times if you're contracting using them, because again, it's really just a digital version, as I mentioned, of real currency. However, when you look at stablecoins, you've got DeFi, you've got cross-border settlements like we do at Yellow Card. You've got all these various use cases that stablecoins are able to function with that CBDCs, which are fairly rudimentary, you're looking at things like, payroll within a country, maybe welfare, but you're not really looking at high value, sort of complex cross-border flows that you would see with stablecoins. And so the one sort of does need the other, but I would say that those are the two main distinctions. The one is private, the one is government, the one is really just a digital version of something that's already there, whereas the other one is a private token, but its value is derived off of something that is very stable in value.
Got it. And final question for you today. Let's fast forward 5 years. What does Africa look like in terms of stablecoin adoption?
In the next 4 to 5 years?
5 years.
In the next 5 years, I think it's going to be exponential. Other than, I think people got wind of this sort of industry or space through cryptocurrency, for example. We're seeing this craze with, political instability, etc. People are now wanting to find ways to not only, store their value in something that's decentralized, that's away from the noise of the political world, but also to be able to find ways to very cheaply and very quickly innovate within their businesses, to operate in a manner that's cost effective, and to also have a far wider reach. Now, Africa inherently is a continent where financial inclusion has always been an issue. So one innovation that stablecoins has brought to Africa is the fact that now you've got a widespread community which has access to financial infrastructure or just a financial system, which they wouldn't otherwise have through traditional banks, which is very location dependent, can be very expensive. And that's one of the biggest examples, I would say, in Africa particularly, where we're seeing adoption really multiply, purely because this innovation is solving a real problem, a real pain point that African countries are facing. And then those countries that I mentioned earlier, you've got your Nigerias, which have massive sort of instability when it comes to regulatory landscapes. It's very difficult for businesses to transact cross-border from that country. So for example, this is, again, another solution to an issue which is being faced in that sort of jurisdiction. So to answer your question without taking too long, I do see that the adoption of stablecoins in Africa in the next 5 years, if it's not already mainstream by that stage, it definitely will be exponential.
Jurgen, same question?
So I can certainly see that the African and local banks are seriously investigating stablecoins as assistance with liquidity. So I think as the regulation rolls out over Africa, all the banks are going to get involved. So there will be a seamless transition between your bank account, stablecoins, and cross-border payments. I actually don't see a lot of people won't even know that stablecoins are part of that ecosystem. So, for example, you might be sending funds from South Africa to Malawi. You would get your kwachas in your bank account in Malawi, but you wouldn't actually know that there was a stablecoin mechanism behind that. So I think it's going to get to that point where it is actually the engine behind this ecosystem. Of course, this is what we are targeting, right? So, but at the end of the day, I think that the big banks and all the banks in Africa are going to get involved.
Thank you. We've got 2.5 minutes left. Just opening it up to the floor, perhaps. Any questions for our panelists?
How do you prevent this uptake in stablecoins, specifically outside your government jurisdiction, from undermining the government's and central bank's ability to control its own monetary policy?
I think, and that's a very good question. I think the one thing that we want to emphasize in the industry is we're not trying to sort of replace what the government has already put in place. We're merely trying to open up a conversation to say, how can these two sort of systems coexist? The SARB already has its guidelines, it already has its infrastructure, it exists. It's not just going to wake up one day and say, okay, we accept defeat. Stablecoins are now the thing that we're going to be, sort of abiding by because we've lost a sort of battle. We have to kind of assist in spearheading conversation to help slowly integrate the conversation of stablecoins with, regulators, for example, in order to make sure that the two systems talk each other. We talk about dual rails, I think, in this case. So it's an ongoing conversation. I think how we prevent it, to answer your question, is to make sure that we're very proactive in engaging with regulators, banks, big players in the space, to make sure that we all have the same goal.
But is there a way to prevent locals from using like US dollar stablecoins? Eventually, someone told me yesterday about the M-Pesa effect. Sorry.
Yeah.
Someone told me about the M-Pesa effect, where they started with a few and then all of a sudden everyone is using it, and now like 80% of the GDP goes through M-Pesa. Whereas now if you do the same thing in Nigeria, where everyone's starting to use US dollars, people start talking in US dollars, they start pricing in US dollars, it's like, why would we even want the local currency?
Truth be told, there is no way to prevent it at the moment. There is no way to prevent it, but yeah, I think you would need a regulator to tell you what they would have in plans in terms of stopping that from happening. But I don't know if my colleague next to me would have some insight, but yeah.
I think, you know, at the end of the day, if the regulators feel that there's a systemic risk, so for example, when some of the bigger banks went under in the 2008 banking crisis because of all the property sort of underwriting issues that they were facing, there was a systemic risk that went through the entire economy. What we need to understand is that Tether is already a $60 trillion asset backed by you know, US dollars. But actually most of it now is backed by government bonds. So there is a systemic risk already on something like Tether. So if we have a run on Tether, we also have a $60 trillion run. So, you know, there's systemic risk. So that's part what the Clarity Act is come in. But yeah, and I think that is the main purpose of the regulators. You know, at the end of the day, to make sure that people are safe. You don't want to be holding on to USD Tethers. Today it's, I don't know, $100, and tomorrow it's 50, because, you know, the price have halved of one USD Tether. So that systemic risk is real. And a lot of people don't actually realize that. A lot of people don't even care that Tether hasn't been properly audited ever. A lot of people don't realize that it's actually not even backed by fiat, it's backed by government bonds. So these are the things that are concerning.
You're about to start the run on Tether.
You know, not really a run on Tether, but these are real threats. But which bank is going to hold $60 billion for you in a bank account? No one. They're going to be backing it by government bonds. So, you know, you really need to understand how this thing is bloating. And yeah, so there are a lot of risks involved. Some of the risks are larger than others. But yeah, so I think that's partly why the Clarity Act came in.
I think we're out of time. Thank you so much, Kamo. Thank you, Jurgen, for sharing your insights and wisdom with us. And that's a wrap. Cheers. Bye.